Hi everyone, it's Jack back with another video. Today I'm going to be talking about ASML, one of my favourite companies, a personal holding. It's up 30% since the start of the year, mainly in, being in Nvidia's slipstream as a company that's affecting the semiconductor industry. But this is a truly pivotal company for the growth of the digital economy. Its monopoly over the EUV machines that it produces, they're the only company in the world that produces this. It's a real bottleneck for the semiconductor industry. It is absolutely required going forward. And this puts the company in an effective monopoly. It's an extremely powerful position. It is an earned monopoly, unlikely to be challenged. And that is why it trades at such a pretty high multiple right now, 40 times earnings, 42 times earnings, right near its 52-week highs. It's up a bit today as well. I want to analyse this company, go over its earnings, go over what its future is, and can it justify this valuation moving forward. Despite the current valuation, which has obviously been ran up a bit by the hype around AI, in the last year or so, it's actually been a bit of a struggle. There's been a large decline in demand. Bookings have came down significantly, whereas right now bookings are up dramatically. And this is part of a general cycle that ASML have been documenting. And they see there's been several market cycles where there's been an extreme rise and then a precipitous collapse in the aftermath of the Y2K, after the collapse of Lehman, where it was down 30% and then up 60%. After a precipitous collapse, they see a sharp increase and a steep ramp. They believe they must be ready. They believe this is coming. They're seeing a 22% decrease, inflation, rising interest rates, etc. They believe there's going to be a sharp acceleration of digitalization moving forward, and they want to be ready for that. This makes sense. Semiconductors are traditionally seen as a cyclical industry. However, over the long term moving forward, I don't think that's going to be necessarily the case. I don't think we're going to see cycles as often or as strong. That's because chips and semiconductors are so essential to daily life now, in the daily lives of individuals. I don't think there's going to be really cyclical change in the purchase of iPhones, for example, and they're just going to be in basically every application they can be used in. The market expectations remain unchanged right now. There's massive tailwinds behind semiconductor industry. Semiconductor revenue is expected to top $1 trillion by 2030. So depending on which estimation you look at, we're probably at around 600 million right now. That's a really nice compound annual growth rate over the next 5 or 6 years. Over the past 5 years, ASML actually grew at a rate faster than the overall semiconductor industry. You can see in 2019, total net sales in euros around 11.8 billion euros. Now in 2023, nearly 28 billion euros, an absolutely staggering increase at the sort of scale this business is at. Most of that was an increase in logic, with memory also doubling, but that is a smaller section of the business. But logic up around 150%. Install-based management, which is effectively the management that's required of these pieces of equipment, the maintenance, the operation, that doubled as well, and is clearly very scalable. Similar results from those recent quarters. So it's not all been just Nvidia and AI boom while this business has gone up. It was up a decent amount on the day the results were published, mainly because that net bookings of 9.2 billion euros, that was up dramatically, which is basically because these are such long lead time items. This is the backlog effectively. EUV bookings of 5.6 billion euros, earnings per share of 5.21 for the quarter, so you just call that 20 euros for the year. This is a $900 stock right now, so clearly it's a very expensive business. Net income as a percentage of sales, 28.3%. That is absolutely staggering margins. Operating margin 33.1%, so really good conversion to net margin, and really good conversion from the gross margin of 51.4%. Absolutely excellent. Not to mention the revenue numbers, which were above expectations as well. Net sales of $7.2 billion for the quarter. The reason why the net booking increase is so important is because effectively, if you don't have a backlog, your sales can be lumpy, because if you think about it, these pieces of machinery are effectively hardware. They need to be bought once, or sometimes many times for production of fabs or whatever, but effectively they're bought 1 year and then a couple of years could pass without needing to buy one. So sales can definitely be lumpy, which is why it's really important to have a nice backlog. As you can see, there's a degree of sort of seasonality quarter to quarter. Net sales, while generally increasing year over year, you can see there's a significant increase from 6.4 billion euros to 7.2 billion euros, but quarter to quarter there's a bit of lumpiness there, with Q2 2023 being significantly higher than Q3 2023, so a degree of difference there. Gross margin typically falls between 50, 51, 52%. Right now it's 51.4%, which is fine. R&D costs normally around €1 billion for each quarter. This is to be expected. It's important to keep innovating. Net bookings, again, as you can see at the bottom, So the rest of it isn't so important to me. It's just really impressive income numbers. I'm not going to bore you to death with the ones that we've already talked about. But the net bookings is really crucial here because this was seen as a weakness of ASML. You can see Q1, Q2, Q3, net bookings down in the €4 billion and below range, just €2.6 billion for Q3 2023, and that was a real worry at the time. However, bounced straight back up to over €9 billion, and with the amount of fab production coming in the next few years, this is going to go even higher in my opinion because the lead time for these machines is so long. Now obviously ASML is an excellent business. The question here really is, can it justify its valuation, because the outlook wasn't actually that impressive. Net sales of between 5 billion, 5.5 billion. As I mentioned, of course, these can be lumpy and it's probably more important to look at bookings overall, but this is not particularly good, and with a reduced gross margin of between 48 and 49%, where it's normally 51%. Again, quarter to quarter doesn't really matter so much. For 2024 as a whole, they think they're going to see similar net sales as 2023, but with slightly lower gross margin, which is not really what you want to see from any business really. So we're looking at flat revenue and decrease in margins, so effective valuation is going to increase even further. We're looking, instead of a price, all else being the same, instead of a PE of 40, the 4P is probably going to be more like 42, 43. This is not really what we want to see. However, with ASML, you've got to really looking at the charts I was showing earlier, that the semiconductor industry is predicted to effectively double in sales by 2030. This is an essential business to that supply chain. Therefore, ASML can probably expect to be doubling its sales or getting close to doubling its sales in that time period. And the key thing that I mentioned, as I say, sales can be lumpy, but there's 20 fab projects worldwide from their customers, which their customers are effectively anyone building a fab, new fabs and expansions, and they're all expected to take tools in 2024 and 2025. This is extremely bullish for ASML's revenue in late 2024, early 2025. As I mentioned, if they decide not to buy in early 2024 because they're buying late in 2024, it can cause lumpy revenue, which is clear what's going to happen in Q1. But an extreme tailwind with all the fabs because of sort of not the end of globalization, but definitely onshoring, as people realise that semiconductor manufacturing is localized. So effectively Taiwan and Korea really at the leading edge. It's only really Taiwan right now. There's a lot of need to onshore, as you can see with those first tool ones. They're going to be Intel's fabs in America. So this is majorly bullish for ASML moving forward, as they're going to get a ton of revenue from this. Aside from that outlook, which can be easily explained in my opinion, the only real problem with this business is valuation. It's just been run up a little too much. Right now it's sitting significantly higher than the S&P 500, which is around 19 price trailing earnings. Currently it's sitting on price range around 43, which is sort of where it trades all the time. Its 5-year average is around 42. There have definitely been cheaper times to buy this business. You'll look at price to cash flow right now of 62.3. That is very high, much higher than its 5-year averages, which are already objectively high for any business, of around 36. Really poor earnings yield, really poor PEG ratio. As I said, the price of forward earnings is effectively the same as it is this year. So for me, it will be really hard to part with any cash here, and it's an absolute hold. If you look at just last year in 2022, you could pick this up for around 35 times earnings, which is not cheap by any means, but this is a perennially expensive business because of its position in the market as basically a complete monopoly and has excellent gross margins and is necessary for the future growth of the human race. So as a privileged position, it gets a privileged multiple. However, I think right now it's probably a bit too rich. I'm quite happy to hold on to my shares. The birds among us may be expecting a recession. I don't know what I think, but if there were a recession and ASML got back down to, sub 800 numbers, sub 700, whatever, I'd be buying hand over fist. But right now in this 900 range, where it's trading at a price of earnings over 40 and a price of forward earnings over 40, I don't think it's a buy for me. It's a hold right now. Not in a rush to sell my shares absolutely whatsoever. Went quite nicely on them, and I think they're not a forever hold by any means, but as close to a forever hold as you can imagine, unless it's a significant technology shift. Right now I'm quite happy to hold on to these shares, but of course that's just my opinion. You let me know what you think in the comments down below. I'm of course not a financial advisor, it's just my opinion. If you want to buy stocks, you want more information on ASML, you should speak to a registered financial advisor or do your own research and due diligence. Let me know what you think in the comments down below. I'll see you again next time.